Hi, Bill from The Educated Landlord here. I have been sending out a few emails in the last few days. We've been talking about how I got into some of the rooming house and how I expanded my business so much. Today, I just want to do this quick little video talking about rooming houses, and specifically, I'm going to compare the rooming houses to some typical rentals. And I understand that costs vary all over the place. So this is just kind of a rough and loose estimate. So numbers can be higher for purchasing, rents can be higher, and at the same time, numbers can be lower and rents can be lower. But it's just kind of a number that floats around, and the gaps tend to be fairly common, but you should be doing these numbers yourself in your area. So just to get started, what I'm going to compare first is just a typical rental, a typical single family rental. So a single family home, one family or one individual renting. And I'm going to base the cost roughly on $300,000, which would equate to about $1,150 monthly mortgage payment, taxes, insurance, $300 monthly, could be a little bit more, could be a little bit less, and rental income. You're looking at about $1,700 monthly. Again, depending on where your area is, if you're in New York City, that could be $4,500, that could be $10,000 a month. And if you're in somewhere in the middle of Texas, that could be $400 a month. So it does vary. But in this particular example, you're looking at about $250 a month cash flow. Now, just some background, I base this on 20% down. I base this on a 3% mortgage over 25 years and just kind of rounded the numbers to make it simpler and easy. I think it was like 1137, but 1150 is easier to deal with for me. So compared to our next little option is a typical suited property. So this is 2 units. You got 2 different incomes coming in. And with a suited property, they tend to be a little bit more, might have a little more cost in there. So I bumped it up a little bit to $350. Mortgage payment, of course, will go up as well. So you're looking at $1,350 a month. And your taxes are up a little bit. We'll look at $350 a month. And then your rental income is also up because you got 2 units and you're looking at about $2,100 monthly. Again, this can vary all over the place. I use $1,200 up and $900 down, or $1,200 left and $900 right. It could be 12 and 12, so it could be a little bit higher. But you'll see the cash flow is a little bit higher. We're up to $400 monthly cash flow. And now I want to compare a rooming house. And with a typical rooming house, I normally have 5 rooms that I rent out. It could be 4 rooms, it could be 6 rooms, it could be 10 rooms. And in my example, I'm using $250,000 because I have a property that's a half duplex that I'm using as a rooming house. So it's a half duplex, so it was a little bit less money. It's actually less than that, but I wanted to use easy numbers, so $250,000. Mortgage payment on that property is about $950 a month. Taxes and insurance are more, again, because it is a rooming house environment, so $450 a monthly. And my rental income, this is where we get a little bit crazy, $3,700 monthly. That is based off of 4 rooms at $175 and 1 room at $160, all weekly. So that generates quite a bit of monthly income, which gives me about $2,300 monthly cash flow. Now, in all these examples, I'm using best case scenario. We will have vacancies, we will have other issues, and you're not going to get $2,300 every month. You will some, but you won't get them every month. So in a typical rooming house, out of that $2,300 monthly cash flow, you got to remember you've also got additional expenses, and some of these are things like utilities. You're going to have higher vacancies, and you'll have some repairs. So even if we shave, let's say $1,000 monthly off of that, you're talking about a $1,300 a month cash flow on a property. And the better systems you have in place, the better processes, the faster you're filling vacancies, though that $1,300 can jump up quite a bit. So just to recap some of these numbers here, if we're looking at a single family home, roughly $250 monthly. And again, I know people that are making way more than that, and I know people that are making way less than that on a single family home. So you're kind of all over the map with that, and it can depend on your area. Challenge with a single family home is if somebody leaves, you're vacant for a month, that can wipe out a ton of cash flow right away. Typical suited property, $400 a month. And again, I know some people that are making up to $1,000 a month, maybe even a little bit more on a suited property. And I know some that are making a little bit less. So it really depends on how you're running your property and where you're located. And then with a typical rooming house, $1,300 monthly. So The next thing we need to talk about is with a rooming house, there are some caveats. There is definitely more work. You got more people, so there's obviously more work. You got more problems. Again, more people, more rooms, and more problems. And I put down problems twice. There's that many more problems. And finally, you've got much more cash flow. So, it kind of balances itself out. And yes, you're going to have to deal with a little bit more work. You're going to have to deal with a few more headaches, but it can really be worth it. And as I talked about in a previous email, by getting into rooming houses, I was actually able to give up quite a good paying job because I had so much more cash flow coming in. So if you're making approximately $1,300 cash flow on a property, if you get 3 or 4 or 5 properties, suddenly you're looking at $3,000, $4,000, $5,000 a month of cash flow coming in from your rental properties, which can go a long ways towards replacing your job. So that's the end of the video. As always, I've got more resources for people looking about rooming houses. You can find it at www.theeducatedlandlord.com/rooms. Hope you enjoyed this. Please leave a comment below, and I would love to hear back from you.